In this presentation, we will add capital expenditures to our financial statements with the use of the bank feeds. In other words, the bank feeds have brought in the expenditures related to capital expenses, and we will now include them to our financial statements. Let's get down to business with Sage Business Cloud Accounting. Here we are in our Get Great Guitars company file within the summary page within Sage. We're going to start off by opening up our reports. We're going to go to the reports drop down. We're going to be opening up the balance sheet. This is going to be a custom that we're going to be going through pretty much from here on forward. And that is to have our reports open and then have our financial information open so we can bounce back and forth, see the effect of what we're building, the financial statements, the balance sheet, and the income statement. Once open, then I'm going to right click on the tab up top. Going to duplicate that tab. So we're going to right click on that tab up top, duplicate it. Going to do the same thing. I'm going to go back to the tab to the left. We're going to do the same thing for the other major report, that being the P&L, profit and loss income statement, whichever you want to call it. So then I'm going to go back up top and I'm going to right click on this tab up top and we're going to duplicate that tab. So now we have our balance sheet and then our income statement, and then we're like going to do stuff on the left hand tab. So we're going to do stuff on the left and then check out what happens on the right, because the stuff on the left is going to affect the stuff on the right, which is the financial statements. Let's go back to the balance sheet now and just make sure that the dates are okay. I'm going to bring this date all the way up to the end of December because that'll just make sure that it picks up everything. So I'll just say the end of the year, even though we're working, in March, I believe. So we'll say the 31st, and then I'll calculate that. So update that. Calculate, update, refresh. You know, every software seems to want their own kind of name for the the refreshing button. So in any case, I'm going to go back over here and we're going to do the same thing for the income statement. Now we're on the second tab up top. I didn't really say that. Second tab. And then we want to be in this year. I'm going to be in 2020. I'm going to calculate that. And all we have thus far is that 620. Now we're going to go back to our first tab. This is where we're going to do stuff. I'm going to go back into the summary page then. This is our starting point, our launching point. Then I'm going to go into the banking information. So the banking information can be found on the home page. If you scroll down to the banking information, I typically like to just go to the ribbon to the banking. So we're going to go into the banking. We're going to be looking at those bank feeds. We now have 12 left. 12 left of those bank feeds. We'll go into those 12 bank feeds. And here, of course, we have all of our transactions that pulled in from the bank, but they're in Sage limbo, and we're going to help them on through to the financial statements. So we're going to be down here. I'm looking at this one for Office Depot now. So Office Depot, we have the 16,000. I'm going to say that this one is going to be, and we're going to concentrate on some things that deviate from basically the norm right now. So last time we looked at a normal kind of expense. That's kind of the easy thing that you'll see. If you have like the telephone, the bill, the utility bill, and whatnot. We're going to take a look at a couple other things that'll be a little bit more difficult. So most of the time, most of the money that comes out of your account is going to be for expenses, like we did last time. And it'll be fairly easy because you could just set up an expense. We're going to look at a few things that are going to be exceptions to that general rule at this point now. One of them would be if you purchase something like large that you have to depreciate, something like property, plant, and equipment. That's what we're going to do here. We got a large piece of equipment that we purchase. Now, when you purchase a large piece of equipment, you can't expense it. You're going to put it on the books as an asset typically, and it's also something that we usually need to give to our accountant and tax preparer because they're going to need to calculate the depreciation, and the tax depreciation is often necessary to calculate in the tax software. So we're going to track this separately in a fixed asset type of account. So I'm going to go to the for item here, and note the for is going to be the vendor. It's often the case that you could basically copy the vendor over here because this is from the description or the reference, or you can copy it here in the reference line and then add it if you need to, or search it. You don't want to add multiple vendors, so like make sure that you're not duplicating vendors because it was spelled slightly different or something like that, because it just gets messy. It will be able to run reports by vendors, so we'd like to have just one vendor that's paying us here. So then on the other side, we're looking for an account, and it's going to be a assets type of account. So we have the prepayment here. Here we have property, plant, and equipment. Let's just use that one. Let's put it right into property, plant, and equipment. Now you could make different sections. You could make like furniture and fixture versus the auto and so on and so forth. But bottom line is you want to be putting it into the category, the type of account of property, plant, and equipment as opposed to like an expense type of account. So I'll just use that one since they got that one set up for us. Then I'm going to create it. What's it going to do when we create it? It's going to be increasing on our financial statement on the balance sheet the fixed asset type of account, and the other side will be going to obviously a decrease to the checking account. Let's go ahead and do that. Let's create that and see what happens. And then I'm going to go over to the balance sheet and check it out. We're going to refresh the balance sheet, so I'm going to calculate it again, which is the term they like to use, which is a pretty good accounting type of term, calculate. I'm not really used to it yet, but because I've been using the software that calls it update or refresh, but calculate, recalculate it. So then we're going to go into the property and equipment here. It's in the fixed assets. This is what has just been included. And there it is, and it looks good. And note the type of account. It's useful to look at the account type. It's going to be called an other payment. So you'll recall last time we did an other payment form. Pretty much every time it's going out, it's going to be called other payment. It's useful also to go into it and just get an idea, a feel for the actual form that's going to be filled out. This is the actual form. Notice it didn't take us back to the bank feed form. It took us to this form. So even though we're entering into the bank feeds with like a shortened kind of format, it's still using this form. This layout is the form that is being used. So I'm going to go back, and we're going to go back on over to the balance sheet. So I'm just going to go back until we get there. The other side is, of course, in the checking account. So if we were to open up the old checking account here, we'd see the other side of the transaction. And there it is. There's that 16,000. And then I'm going to go back up. Notice that Sage, when you do run these reports, these are basically the GL reports, the general ledger, the transaction reports. Note that Sage does tend to be more accounting lingo, accounting language based and whatnot, whereas QuickBooks tries to kind of pull away from accounting language, which can actually make things a little bit more difficult sometimes because they make up, sometimes you get your own terminology here. But notice that the naming of the report is actually a general ledger report. That's what we have here. Instead of like a transaction detail report or something like that, which would be more of a term that might be used in like a QuickBooks software. And also note that they do include the debits and credits here. And when you see the running balance, they actually reference the debits and credits. To me, that's easier as well, because when you try to remove the debits and credits, what happens is then you see things in terms of plus and minus, and things can get mixed up. When you have some confusing things, as with a contra asset account or something like that, the plus and minus kind of format has problems. That's why debits and credits are used. So just note that when you compare and contrast something like a Sage, I mean, if you're working in financial accounting and you learn financial accounting and then you want to learn accounting software, it's actually kind of easier to use something like Sage that actually, uses the same kind of terminology and looks and shows you the debits and credits with it. It's more transparent in that way. Whereas if you use a QuickBooks and something like that, they might actually many times not have the debit and credit column a lot of the time. And that can actually be a little bit more confusing. But the attempt is to make it easier by removing the debit and credit for those that don't have, the financial accounting background. To me, I kind of like to see it in there because it really gives a better understanding of how the building blocks work. In my opinion. So in any case, there's that. There's going to be no effect on the P&L, the profit and loss. So if I recalculate the P&L, nothing happened here. Why? Because we put it on the books as an asset, and then we're going to expense it using depreciation over time. And that's an accrual thing, even though we're on a cash basis here. And even if you're on a cash basis, even for taxes on a cash basis, you pretty much have to do this, right? You got to put it on the books on your taxes as an asset, and then depreciate it. You may get an accelerated depreciation or a 179 or special depreciation, but you still got to basically go through that method. So then I'm going to go back over to the first tab, and let's do this for another one. This other one is Amazon. Also note with Amazon and with that Office Depot item, these are two items where it's difficult to just always be posting to the same thing. In other words, it's going to be difficult for Sage to remember the transaction as we go from transaction to transaction, because it may be the case that we use Amazon for different things. We might buy different things here. We might buy office supplies. We might buy large things, as we did here, and put it in the property, plant, and equipment, or buy other types of things for Amazon that we may be categorizing somewhere else. So some of these type of transactions, like the one we did last time, Edison, for the utility bill, is going to be very straightforward. The system should be able to memorize that over time, or it'll be easier to categorize that. So when we try to automate the system, we've already automated the system by putting the information into the system from the bank feeds, but now we want to be able to kind of make the process of us then assigning the correct account and making the account from it as automated as possible. Some are easier to do than others. Edison Telephone Company, those are easy to do because they only have one account for the vendor that will come in. However, if you have multiple accounts for one particular vendor, then you got to be a little bit careful when you start to post things out to make sure you're putting it to the proper account, given the fact that you may have different accounts for that one vendor. So same thing here, though, in terms of copying it. I could copy over here, or I can copy the reference, and I could say I'm just going to set up another vendor for that particular vendor, another name for that vendor. So we're going to put that there. We're going to save that. And then again, I'm going to put it, and it probably shouldn't be check. I mean, my default a lot of times is probably going to be electronic. And if you're using bank feeds to process everything, the electronic is going to be easier than the check, because the check oftentimes won't give you as much information. You'll have to go to the cancel check. You could still go online and usually see the check and see the canceled check. But if you do electronic payments, then oftentimes that's going to feed into the reference column quite well. And even the deposits will feed in on that side. So on the outflows, if you are using electronic or you're using bank feeds and you're dependent on them, it's actually nice to kind of remove the checks as much as possible and do as much as you can paying online and doing that kind of thing, which is becoming an easier and easier thing to do. So then we're going to put this to the property, plant, and equipment. Property and equipment. Once again, what's this going to do when we record it? It will include or increase the property, plant, and equipment, an asset account, not an expense account. And the other side will be decreasing, of course, cash, the checking account. Let's create that, check that out. We're going to go on over to the balance sheet to do so, to check it out. We're going to go back up top and we're going to recalculate it. Let's calculate this thing. Then we'll go into the checking account. Now note the checking account has a negative balance here. Why? 1, we haven't entered the deposits. And 2, it's the first time we've done this, and therefore we haven't entered the beginning balances within the bank feeds. We will talk about that later. It's a common problem, and we will discuss it in a future presentation to add that beginning balance. So there we have it. There's the Amazon. There's the 7,000 related to it. We're going to go back up. I'm going to go back on over to the balance sheet and check out the other side, which also is on the balance sheet, not the income statement, because we put it into a fixed asset as opposed to an expense. That is once again in the PP&E, property, plant, and equipment, which they're calling fixed assets. Just say another name, you might call it, property, plant, and equipment, depreciable assets, fixed assets. In any case, there it is. There's the 7,000. Going to go back over to the balance sheet. Once again, just note nothing is happening to the P&L, profit and loss. Also, just want to point out another report, and again, this is not something I really like in Sage, is that they actually put the trial balance up in like one of the main reports, and they're basically saying, Sage is basically saying, hey, the trial balance is something that you should be using all the time, typically. And that's probably, again, if you think of from a QuickBooks kind of lingo terminology kind of standpoint, that it's different, because QuickBooks sees the trial balance as something that has debits and credits in it, and it buries it kind of at the bottom of the reports in the accounting section, as if the accountant is the only one that's going to use it, or as if accountants aren't doing the bookkeeping, right? Or that we don't want debits and credits. So just that's a difference in terms. I think it's really even if you don't understand the debits and credits, it's really useful to have the trial balance, because it's going to be showing you all of the accounts that are going to be involved in one report without the subtotals. So it's a really useful report to have, and I like that Sage, you could say they're more like tech accounting lingo based to have the debits and credits, but to have that in top. But to me, it's a really important report, so it should be up top. So we're going to go with this year, and I will be printing out basically the trial balance from time to time and saving that so that you could check your numbers if you're following along with this. And this will just list out all the accounts, both income accounts and the balance sheet accounts. So we got the checking account as of this point, the property, plant, and equipment, and the utilities. So again, I'll be printing these out, and you can kind of check your trial balance each time you go through. So most of the time when we work with it, we'll work with the balance sheet and the P&L, profit and loss. When you check your numbers, however, you can check with the trial balance here.